All right, what's good? What's good, everyone? Welcome back to the Wall Street Rundown. I can't even get my words out. This market has been knocking me out. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everyone? How you doing?
Man, this market has been crazy. But anyways, man, welcome to the show where we don't just say we don't just chase headlines. We follow the market and see exactly what's happening, man. So today we're recording episode I don't know what episode is this like, but in any case, this is our last episode for the year before we take a break and come back next year. But it's crazy. It's been a year since we were recording on YouTube, man. It's like time just flew by. Like it's crazy. I remember
Oh.
last year this time we were recording on Instagram.
I also want to thank everybody that's followed us, that's liked, shared our
Yes,
page. So we appreciate all the support. We're trying to grow the channel. And again,
absolutely.
the goal is to provide useful market content that you can actually use. So we hope
Yep.
that that the content has been useful throughout the year. And we're always welcome to suggestions and things you guys would like to see more on the show. Obviously, we're going to be doing more stock analysis as we move into 2026. So just want to, put that out there and thank everyone for their support.
Absolutely. And hey, we're looking for somebody to help us with this content, man. So we're looking for somebody. So if you know somebody who's willing to come in alongside of us and help us out and to get our content out there, please reach out to us and let us know. Because we definitely want to get some people out here to help us with the content to be able to kind of get more and more people to show up. But let's get back to this market, man. I feel like the market couldn't decide whether they wanted to run or rest this week. I mean, we talked a little bit about what was happening with it. I mean, if you felt like that, you weren't wrong. We saw some momentum, then we saw some hesitation. Like Wednesday, we saw that crazy drop out of nowhere. And then we saw some money kind of quietly rotating under the surface in certain sectors. For example, go look at the healthcare sector. You can see like some money rotating in there. Go look at the financial sector. I think a firm was like, I don't know if it's a firm or one of those other ones.
I
They
think
were
it
doing
was,
some
yeah.
numbers. They were doing some numbers this week. You know what I mean? So go look at some of those. Some energy stocks actually popped up a little bit too. I think I was looking at LEU and some other ones. But go look at some of those, man. Like it's money is rotating somewhere, but you just gotta kind of keep paying attention to where exactly the money is floating to. So financials were doing good, healthcare was doing good, energy was doing good. The tech kind of did good a little bit toward the end of the week. But overall, man, like the market kind of like kept us confused at the same time. And I think Wale is going to touch base a little bit on that, why we think maybe like something is happening under the surface also. But today, man, we want to cover so many things, but I'll let Wale kind of jump in and kind of like break down this week, man. Like what's exactly is happening, especially once you talk about the $40 billion a month that's coming to the market. So let's talk a little bit about that, man, because that definitely kind of threw people for a limb this week.
Yeah, so one of the things I'll say is that I still am not in the camp of this whole like AI bubble where everybody's saying that there's a bubble. I think that companies are probably still going to maybe have to readjust how much that they're spending on AI. Maybe they have a goal to spend X. Maybe they don't spend all of that. Maybe they only spend 50% or 70% or 80%, whatever that number might be. But to say that we're in a bubble, I'm not in that camp. So
Yeah.
Wednesday's drop, in my opinion, was mostly concentrated in technology, right? So if you look at the price action for Wednesday, you'll see that there were other sectors that saw inflows of capital. So
Mm-hmm.
energy, healthcare, as we mentioned, so at the end of the year, typically what you'll see, especially after a very good bull run that we've had throughout the year, because if you look at where we came from April to the end of the year, technology led that rally, right?
Yep.
So if you're a fund manager, I keep saying this, and you have profitable positions going into the end of the year, you want to be able to book that profit to your shareholders. How do you do that? You gotta sell some stuff. So that's what
Yep.
we've seen, and money has rotated into other sectors of the market. Now, today, we saw a pretty decent run, right? We saw the market, move pretty, nicely. Even though we didn't close at the highs of the day, but we still had a pretty decent gain. So
Yep.
this is not a sell everything market. I think that you need to be real selective as where you're positioning your assets. So technology to me is still the leader. I still think that there's a lot of good things that are going to be happening in the long run. I'm not going to sit here and say it won't be a bumpy ride for some of these companies, but if you are a long-term investor, to me, technology is going to lead the AI, bull run that we're expecting over the next couple of years. Now, what hiccups will we see along the way? We don't know yet, but
Right.
there will be hiccups, but always look at those hiccups as opportunities to buy good companies at good prices. So, you saw Nvidia's off the highs, you've got Google that's off the highs, you've got a lot of companies that have come off the highs, right? And the first thing you have to ask yourself is why is it off the highs? And has anything fundamentally changed in their business model? The answer to that is no. Then this could be an opportunity for you to kind of step into those companies and then ride the wave back to the top. So that's how I look at this week's price action. I'm not going to sit here and sell doom and gloom, but and another thing, as Billy mentioned too, the Fed's bond buying efforts. We're talking about $40 billion a month of liquidity that's going to banks, hedge funds, and people who need capital. That's a lot of money.
Mhm.
So it's not a 40 billion total, it's 40 billion a month. And this could go on. I got to check how long, but it could be over the next, 5 or 6 months. That's a lot of capital that's going into the market. So we'll see where the money goes to. We don't know what's happening, where that money is going to go to yet. But when you see those types of things happening in the market, typically that's usually a good thing long term. So
Yeah, yeah. And this matters because again, we keep saying, is this quantitative easing or is this like something else that the Fed is doing? But either way, I mean, it's give liquidity to the market, so it's a good thing. But you also going to see the market not really going into like the same direction that you think is going to go, right? So, for example, we saw this week it's supposed to it looks like it was going to go down, and then all of a sudden you see like the market going to be being brought back up again. So, again, keeping an eye on those numbers to be able to understand exactly like what's happening in the market from regular bait from on a day-to-day basis. $40 billion a month, that's a lot of money. You know what I mean? To be thrown into the market. So just keeping an eye on that and knowing that that's what's going to be happening over the next few months. Let's move on to Nike, man. Did you guys see that stock? Like, I know Nike is one of those stories that we've been talking about that they need to get their act together. I mean, I think we've been talking about Nike since last year, and I kept saying like they need to diversify. I feel like the whole shoe business for them is probably like they probably need to figure out a different way to do it. I think they have let a lot of different breathing room, and other companies came and filled those gap. And I think we talked about, on cloud. We talked about Hoka. We talked about I forgot what the other one is, but those companies came in and filled that gap well in 2020 when Nike was going to be innovative with technology and all this stuff. You know, we're overproducing some shoes that are like were considered to be novelty. Like people don't really get it in stores like that, but they were overproducing certain shoes that and forgetting certain segment. Like for example, they neglected the whole running track and field sector. You know what I mean? Like they neglected that completely for like a couple of years, and then you see OnCloud come in, and then Hoka come in, and then all that training. We have other ones that do training and all this stuff. Like they came in and just fill that gap, and now Nike's trying to figure out how to get that market share back. And man, like it's easier to keep a customer than to kind of create a new one, right? It's like you lost your existing customer that used to buy stuff from you. Now you have to compete with other ones that you might have not have to worry about it before. Now, in my opinion, the only way they can grow now, they have to pull an Amazon or Apple move. They got to stop buying those companies. Like I don't care. Like
mm,
if you really want to go back into the market and be able to like claim your share, you have to buy those companies.
mm.
You have to buy those companies. Otherwise, you're going to be competing with them, trying to steal your customers back. Because you got to think about it, those are your customers. Those are the people that used to buy Nike, and they're like, "Oh, this shoe is comfortable. Let me go there and buy this pair." So it's like you pretty much buy your customers back. You're not say buying a company; you just buy your customers back. Buy the shoes back, and whatever you do with the shoes is up to you. I mean, you can do what Apple did with Beats, kill that shit.
Kill the competition.
I'm just saying,
I
man.
mean, I mean, I'll be honest with you, man. They say the definition of insanity is doing the same thing over and over again and expecting a
Expecting
different
different
result.
results.
And
Yes.
whatever Nike has been doing is not working. So just looking at my notes here. So EPS beat analyst expectations, which were probably pretty low. Revenue beat analyst expectations, but gross margins and profits declined year over year. So, and this is why I keep telling people, analyst beats and revenue beats don't necessarily matter, because if you, as a business, were doing better in 2024, and now in 2025 you're doing worse, I'm paying you for future dollars of profit in the future, right?
Yep. Yep.
If that number is going down, I'm not going to buy it. So we saw a decline. Let me see, what was the decline in sales? Yeah, so we saw a decline, and the biggest decline we saw was in China. China sales dropped 17%. That is not something to sniff at, especially since China is such a big market for Nike. So
Right.
now Nike is back to sub $60. Let me pull up the chart and look at it from a technical
It's
basis
58
right now.
right now.
Yeah, $58. So a 10% drop today, which is higher than the lows of the year, which was near 52. But Nike has not shown or done anything that has changed the story of what the company is doing.
Nope.
Now, the one thing that Nike still has, and probably will have for a very long time, is brand equity. It is a very recognizable brand. People are not going to completely abandon the brand,
Right.
but the execution of where the business is going for growth needs to change. So if you're an investor and you want to take a flyer on a good company and you have the patience to wait, you just have to tell yourself that this is probably a trade or an investment that I'm probably just not even going to look at for the next 5 or 6 years. Just going to let things play out. I'm not
Yep.
going to sit there and get emotional. I'm not going to get attached to the stock. I'm basically looking for something valuable, right? And you have to be able to believe in the leadership. And hopefully the new leadership can execute over the next couple of years and get it right. Now, here's another thing that I will be saying about Nike moving forward as far as their athletes. Um, LeBron's probably going to retire. KD's probably going to retire. And those are two big brands in their, you know, of players that they own. Will that help or hurt the company? Give me the name of a big Nike athlete that is probably gone right now. And the thing that I look at is the only two that I can think of are in the WNBA. Maybe that's where they get their growth over the next couple of years, because you've
Yeah.
got A'ja Wilson shoes that are selling pretty well from what I'm hearing. You got Sabrina Ionescu's shoe who's selling pretty well in both men's basketball and women's basketball. So maybe they have to double down on female athletes, because I don't see any male athlete aside from the LeBron and the KDs that have been in the ecosystem for so long. I don't
Yeah.
see an up and coming star in the Nike brand. Devin Booker's shoe sucks. Ja Morant's shoe sucks. And Ja Morant barely plays.
Right.
Zion doesn't play.
Nope.
No one talks about Luka's Jordan Brand shoes. Like none of those players. Um, Jason Tatum is not playing right now.
Right.
And even his shoes to me don't really sell that much from what I'm hearing. Like you go
Nope.
into your local gym and you look at who's wearing what, you don't see people wearing those shoes.
People still wearing Jordans.
People still wearing Jordans. And the Jordan brand to me, like I said, how much can you recreate that brand? Like,
Yeah. Right.
so I don't
Right.
know. I'm not a believer in Nike right now. If I took a flyer on Nike, it's basically just I just want to get lucky. But I don't
Yeah.
believe anything that they're doing or executing on is working, at all. So we'll see if they can figure it out. Now, if it gets
Yeah.
like $50 or below 50, uh, I might be intrigued, but we'll see. We'll see how far this drop goes if it continues to fall.
They are on a struggle bus. I
Yeah.
think the number I'm looking for in is it looks like it's going down to like around 54, maybe around 55 area.
Hmm.
There's a bounce that happened there back in, if you look at that candle back on Wednesday, April 30th.
Okay, I see that. Yeah, that hammer candle.
There's a huge bounce there. So he created kind of this like buying zone. So we'll see. We'll see if we get there, if we can find some buyers down there. But as of now, if we lose that, I think we're gonna go down to like 52, honestly. So
Yeah.
we shall see, man. I don't have too much confidence in Nike right now in terms of the stock and even in terms of the business. They got to figure it out. Like they have to figure it out. Otherwise, it's going to take them years to try to figure this out. So it is whether that's going to be getting a new CEO or growing by
They
acquisition or
they just they
something.
just they just hired a new CEO.
No, they
So
need they need
man.
somebody else. He's not
Yeah,
working hard
maybe
enough.
maybe maybe it's growth by acquisition.
Yeah,
Maybe it's
yeah.
growth by accident. Or maybe they need to get on a call and say AI.
Yeah, just I mean, I don't know.
Say
Yeah.
say something that they're partnering with Open AI to do something. Maybe that'll help the stock.
something, you know what I mean? But I think overall, like they need to get innovative, man. Like it's just the company's stagnant. Like
Yeah,
maybe the shoe game is not it anymore. Michael Jordan came and changed the game for them, but after that, it's like we
yeah.
haven't really seen a bigger star than him so
Yeah.
far.
I
So
just like I said, I feel like their execution of the brand like has just been it has not been what it used to be. Like
yep,
before being a Nike athlete like meant something. Now it's kind of like, they kind of just give it to anybody.
yep,
So
yep, yep.
yeah.
Well, let's move on to Micron Technology, man. I mean, that company reported strong results, like strong results. They reported on Wednesday, December 17th. They beat the analyst estimate for both earnings and revenue. Oh, and that kind of shot the stock up. I mean, the adjusted EPS was like 4.78 per share, which is higher than what the analysts predicted was like at 3.95. The revenue came at $13.64 billion. The analyst thought it's going to be $12.84 billion. That represents like about 57% increase year over year. I mean, they just blew it out the water. So and also they also talked about like their forward guidance was very bullish, which is another great thing too that the company kind of jump from there. And again, I'll go back to what Wale always said, like the company can report all good numbers, but if your guidance is poor, guess what? The stock is gonna go down. So yeah, let's talk a little bit about Micron, man.
Yeah, so Micron is one of those companies that again, I'll be honest with you, I've missed most of this run. Micron was a $61 stock back in April. Micron is now a $265 stock today. And when I look at the AI infrastructure build out, right? To me, there's at least two categories you can put people in. You can put people in the category of the companies that are spending on AI to build more efficient workloads, like the Googles, the Metas, right? The Apples, the Microsofts. They're spending money to create more efficiencies for their business. Then you have the companies that are supplying those companies with the infrastructure for their build outs. So the one thing that MU said had really, really strong gains in their business was their high bandwidth memory product for AI workloads. They said they saw a massive increase in demand for those products.
Yep.
So that's their high bandwidth memory and their DRAM core products. So remember that there are companies that are supplying the data centers with what they need for this build out. Micron is part of that story. You've got power suppliers and cooling providers that are part of that story. Me personally, you got people who like Nvidia who are supplying the GPUs or the chips that are part of that story, right? To me, I feel more comfortable betting on companies that are providing the supplies for the AI build out. Because the one thing that you have to be mindful of is if a Meta or if a Google or if an Amazon or a Microsoft or a Tesla comes out and says that they're going to cut back spending, that's going to hurt the overall AI story. But it doesn't necessarily mean that those suppliers that are supplying the equipment and the infrastructure for those companies are going to get completely cut out. They're still going to be needed in some shape or form. We just don't know how much. So Micron, I mean, from an execution standpoint, if you just look at the numbers and you look at what they said on an earnings call, they look like they're in good shape. And this would be a company that if you put on your list, right, and there is a pullback of whatever magnitude, this might be a company that you can say is executing on all fronts. And to me, you can't say we're in a bubble if some of the suppliers that we're looking at are talking about demand is still there because they're getting calls for their product. They're having to call suppliers and build out their product. So to me, we're not. I don't think we're in a bubble if you have forward guidance from companies like MU or you've got companies like TSM, who have been reporting great numbers. So I'll leave it at that. But I will be honest with you, MU is one that flew under the radar for me this year that I completely missed. You know, but to me, there are still a lot of good suppliers in that ecosystem that you can, and we did a whole episode about the different pieces of the ecosystem that you can
Yep.
invest in the AI story. If you go check some of
Yep.
our older shows, where you can really start to really piece out where you want to be in the AI story. I mean, even though I missed MU, one that I am very happy about, go look at VRT. So VRT was a $53 stock back in March. We talked about VRT all the way back last year. VRT hit a high of $202.45 this year. Now it's come back down significantly. Um, and it would be another company that I would also put in the back of my mind
Yep.
if there is a
Yep.
pullback. So
Absolutely. But like you say, man, like the story behind AI is like it's it's here to stay. It's not going anywhere.
no,
You know what I mean? So you guys
don't
better get used to
yeah, don't
it.
don't don't let anybody tell you otherwise. I think, like I
Yep.
said, I think the issue is if they overestimate how big it could get, that's one thing.
Yep.
But you can also say that they could be underestimating how big
Yeah.
it can get because again, the use cases for this are going to continue to evolve and things are going to continue to
Facts.
get better. So
Yep. Yep.
I don't see it as a depreciating technology, or we've kind of gotten to a point where it's like, oh, we've thought about all the different use cases we can use for AI. I don't even think we've scratched the surface yet.
Not yet.
So,
Not yet.
yeah.
I think we're still seeing like I'll say the randomness of AI right now, or like there's different applications that some might make sense, some might not make sense. But I guess again, I'll like as time comes out, certain things gonna weed out. Some companies are gonna die off, some applications not gonna be usable anymore, and only the ones that we really, really need to be used is gonna be the one that actually survives. And like we talked about it too, like some companies will get bought up. Like
Mhm.
you as a small company, you make a good application. Some other companies will buy you out and improve upon your applications and manufacture it at a scale. So you never know, But I don't think there's like I keep saying, it's like there's no bubble when it comes to AI. They are gonna be mergers. They're gonna be acquisition. There's gonna be some companies gonna die off, but it's not a bubble. It's here to stay.
And
Like,
we've seen a lot of mergers and acquisitions
yeah,
this year. This
yep,
year, we've seen a lot.
yep,
So, and another thing too, like I said, again, there might be some companies out there who don't execute correctly on the AI front.
yep.
Everybody's not going to make it. Like, let's just be clear about that. Everybody's not going to make it. But to me, there's still a lot more work to be done. It's just, to me, it's a matter of how fast do we get there? How efficient is it going to be? And again, I'm going to say it's probably going to be a bumpy ride. You're going to have
Right.
lots of noise and lots of other background things that could be happening. But are we going to get to a point where we see, a 2000 where again you saw fictitious companies kind of pop out of nowhere? I don't think so. So
Yeah, yeah. Right, right. Well, let's move on to another exciting news, man. I mean, I don't know if it's exciting or it's just like it definitely raises some eyebrows. So President Donald Trump's net worth just increased by more than $500 million as shares from Trump Media, if you guys don't know what that ticker is, DJT, soared around 45% in 2 days. On Thursday, The company announced a merger deal with Tay Technologies that's valued at $6 billion. The company said so. With this deal, basically, the both companies will own 50% of the company altogether. So again, this is if you don't know what Tay Technology is, go to their website. TAE.com. Basically, if you go to the about us section, it says Tay Technology is a fusion power company developing the most sustainable, economically competitive solution to bring abundant clean energy to the grid in carbon intensive industrial process. Here's my thought about this. We talked about this so many freaking times, and I hope you guys are listening. Energy is required in all aspect of AI that we do. Again, AI is coming up again. Data centers is coming up again. While they said it best, we cannot run the full power of AI based on the power grid that we have. We need another solution. And I think Donald Trump is figuring out that thing. Well, I mean, he's about a year or two late, but but he's figured out, he's listening to the right people. I guarantee that they're like, hey, this is where the next money is going to come from, is building those, nuclear power, building those clean energies that actually going to be able to power some of those things that we need, so I think it's a wise play, ethically wise. I don't know if it's wise for a president of the United States to like make money off of this, but hey, man, we in a free world, I guess. But at the same time, it's like again, like the whole energy nuclear story is getting bigger and bigger. You know what I mean? So with this deal, I think the road is not clear for some of those regulations to be relaxed when it comes to nuclear. It's gonna be a little scary, right? Because meltdowns are not. Go check out that meltdown that happened in Michigan, like back in like 1980s, 1970s. That was a real thing. They had to shut down that plant and then reopen it again. So just go check it out. It is not. You need to be very, very, very regulated when it comes to nuclear plants. You know what I mean? So again, the energy story keeps coming up. This is another sector that we talked about. There's another story component in that AI bigger story that we talked about, that ecosystem. Energy is a whole different division when it comes to that. So while I'm gonna let you take it out, man, because I think people might look at it as like, oh, why is he doing this? But look at the bigger picture behind all of this.
Correct. So I think the one thing that is obvious now is that as we continue to talk about data centers being built and all of the infrastructure that's going to go into AI, you're now starting to see that the demand for alternative power sources is starting to grow.
Yep.
Now, I don't think that TAE is their technology is not similar to the technology that Oklo provides. They're very
No.
different,
Right. Right.
but it's alternative clean energy. That's the difference.
Mm-hmm.
So you're seeing a shift away from traditional power sources like maybe petroleum, maybe coal, natural gas, and things like that, because as we increase the demand for traditional energy, you have to understand that you cannot sit there and deplete those resources at rapid paces.
Right.
And you also have to understand that, again, I've been saying this, I don't think the way our current grid is structured can handle the workload that is coming for AI. So, therefore, the build out and the need for alternative sources of energy is going to continue to increase. Again, it's going to be a bumpy ride. It's not going to be a straight shoot. I'll tell you that right now. I mean, look at Aqua. Aqua came from down from 193 to sitting at what are we at? $83 now.
Mm-hmm.
And we're sitting right at that 200. Is it the SMA or the EMA? We're sitting at right now. I think it's the EMA right now. Yeah, we're sitting right there at that 200 exponential moving average. So again, remember that this is something that we're talking about that's going to take place over the next few years.
Yep.
Right. Again, this whole Oklo run that we saw this year, if I told you that I thought we would be at $193 this year, the drug test me because I never would have thought that this is where we would be
Yep.
this year.
Yep.
But as we start to push into 2026, 2027, 2028, when we're expected for these companies to actually have a deliverable product that works, to me, the demand will continue to increase, assuming that the story doesn't change.
Right.
Because again, if we see hiccups in supply chain and they can't get their product out when it's supposed to be. All of those things can happen over the next couple of years. We don't know. So that's why it's always good to be in tune to what's happening. But if everything goes as expected and that product is delivered in 2027 and they're able to deliver on everything that they promised, to me, these alternative energy companies are going to be the future.
Yep.
Jensen Huang said SMRs are going to be the future of energy. He said
Yep.
it himself. He
Yep.
runs the biggest company in the world, or in the United States at least. And I don't think someone of his caliber would just go out on a limb and say something like that if he didn't see the vision and he didn't see the need. So I'm still on board. Again, I'm not going to sit here and think that it's going to be an overnight success. But now that the president of the United States is now tapping into alternative energy sources, to me, that's better than the Pelosi buying the stock.
That's a clear
That's a
signal
that's
right
a
there.
that's a clear step of approval, in my
Mhm.
opinion. So I am on board. And if you're not paying attention to that story, to me, I think that the energy growth over the next couple of years and the demand for power is going to be so crucial to making sure that this AI infrastructure build out works. So think of Constellation Energy, think of GE Vernova. Go look at the XLU.
Yeah.
These are the hopefully, in my opinion, I don't know. We'll see what happens. Maybe XLU does outperform SPY next year. I don't know. We'll see. But that's another thing that I'll be looking into in 2026 is, do we see utility companies really start to outperform the overall market?
Yep.
Because
Yep.
that's kind of what we've seen so far this year.
Yep. Yep. And it's
So
happening. I mean, go pull up the XLU chart. You can see it's been happening. You know what I
yeah,
mean? So
we've come down a little bit from the highs. Come down from 46.89. We're sitting at what, 42.63.
mhm.
So yeah, but that's a story to definitely be watching. But I think power providers are gonna be they're gonna be very, very important to this whole AI infrastructure build out.
Yep. 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 And I mean, like Wale said, like this is a much needed part of the whole AI ecosystem. In order for us to develop those things, be able to grow faster, even the data centers and stuff, this part is needed. So again, this is a must watch for next year. I mean, I feel like this year was more like AI, the actual companies that produce AI, the actual companies that make components of AI. But now, how do we support AI? Because we already know, okay, we've proven the concept that we need it, it's working. Now, how do we actually support AI? Data centers, energy, and everything else to support all the ecosystem. So, yeah, I think money's going to start rotating that way real soon. So, but let's jump onto CPI, man. I know you and I were laughing about this, but again, the November CPI report showed inflation rising by 2.7% year over year. That's below the 3.1% expected and down from 3% previously, right? It's suggesting the price pressures are easing. Core CPI, which strips out food and energy, came in at 2.6%, also under forecast. So again, this soft landing of CPI, as I call it, I mean, we seen a little bit of rally in the morning, but I think it kind of faded away after that. But again, like, is this data accurate? I mean, we had the government shut down for like dang near almost 3 4 months. You know what I mean? And are we measuring only like 1 month? Are we not taking the other months into account? Like, I don't understand how they came up with these numbers. You know what I
So
mean? So
I
let's
I
talk
looked
about that.
I looked at a post the other day, and I shared this with somebody about what went into the CPI numbers, right? And if you go look at all of the categories that showed up in CPI, the only two categories that were reported for August and November, actually three categories: gasoline, used cars, and apparel. There is no data for any of the other categories. There's none for food, there's none for new vehicles, there's nothing for services, shelter. So, how the data was calculated, in my opinion, cannot be trusted. It cannot be trusted. And um, I will wait and see until we get a full report moving forward, because a lot of people are saying that the way the data was calculated was kind of sketch, because they didn't have all of the information that they needed. But they were kind of on the tip of, I just want to put something out there rather than put nothing out there.
Mm.
So this CPI report, I'm going to be I'm not trusting any of that information. And I will just leave it at that. Another thing that I will always keep hampering on is the fact that when you look at what the Fed is looking at from an inflation standpoint and looking at the data, we're only going back 1 year. That's it. If you want to take the average inflation, the annual compounded inflation increase from 2020 to 2025, it's way higher.
Mm.
It's way higher than that. So we take the total from where we were in 2020 to where things are now, and you average out that number, you probably looking at an annual increase of maybe like 4 or 5%. And for people who probably haven't seen a compounded increase in their income of 4 or 5% annually over the last 5 years, are feeling the pinch.
Mm.
Because remember, inflation compounds just the way your money compounds. Inflation
Yep.
compounds.
Yep. It doesn't just disappear. It's not like, oh, today we have 1%, tomorrow we're starting at zero. Like
No, exactly. It
that's correct.
compounds.
Yeah.
People have to understand that concept, that inflation compounds. So let
Yep.
me give you an idea of what that means, right? So let's just say you are a consumer and you're used to buying bananas for, let's say, a bunch of bananas for $5 per pack. Now, let's just assume that inflation is compounding at 3% a year. So next year it goes up to 5.15. Then the next year it goes up to, so just look at this increase. If, oh no, I did that wrong. 515 times 1.03. Oops. Forgot a zero. So if it goes up by 3% a year, it goes from $5 to 5.15. Then the next year it goes from 5.15 to 5.30.
Mm.
Then the next year it goes from 5.30 to 5.46. And then the next year it goes from 5.46 to 5.62. So we're talking about bananas, right? And we're talking about $5 of 3% increases. I just did that. What I compounded that, over maybe 4 times.
Mm.
So you're seeing a 62-cent increase over 5 years. But when you do the math and you do that 62 cents over 5, that's a 12% increase. Now, over that time period, let's just assume that your income has not increased by 12%. What does that mean? You're
Mm.
eating into your current savings or your current earnings.
Yep. Yep.
And gradually, what happens? You see it in bananas, then you see it in gas. You see it in gas, then you see it in mouthwash. You see it in mouthwash, then you see it in toothbrushes. All of the things that you use on a day-to-day basis incrementally get more expensive.
Getting more expensive.
And if your income does not compound the same way your spending compound, then that eats away into your savings.
Yep.
That's how inflation works.
Yep. Yep.
That's how inflation works. And we're talking about just everyday household items. Now
Yep.
let's talk about cars. Let's talk about electronics.
Rent.
Let's talk about rent, right?
Mm-hmm.
So as all of those things start to compound over time, you are eating away into your ability to buy things because
Yep.
my income hasn't kept up.
Yep.
And that is a nasty feeling. To me, I don't know if this will ever happen, but to me, at the end of each year, if we have an increase in CPI, I feel like companies should be able to um, add that to people's earnings, like the way Social Security has a CPI increase every
Yeah,
year.
yeah, yeah,
So I don't think that'll ever happen. Honestly, I don't think that'll ever happen because if a company's unprofitable and they're not running their business right, they're like, how can we pay people more money? So
yeah.
I get that, but
Guess
it's
what?
just
They don't even do it when they're profitable. So I don't
that's
know.
true. That's true.
You know what I mean?
But
Investors come first. Like they pay the investors first, and then everybody else get the crumb. So
yeah,
yeah,
so that's why when people think about inflation and when you look at the total picture of inflation, people will look at headline CPI or headline PPI or whatever and see what was that number. Remember, that number only goes back 12 months.
mhm.
To me, you got to go back when the inflation first started, and that was back in 2020. And if you go look at that map and you take the average of that number, you'll see that it is a lot higher than what people are being reported,
Yep,
which is one of the biggest reasons why you have to be invested in the markets because that is the one way where you can outperform inflation on a long-term basis. Remember, the stock market, S&P 500, average rate of return annualized is anywhere between 9 and 10%
yep,
if you just invest in the S&P 500. Inflation's trajectory of compounding is nowhere near that number. So the market is outpacing inflation by a wide margin. So if you are not able to compound your income at the pace of inflation because of your employer might not be able to give you a raise or for whatever reason, at least you have the market compounding your assets in a way that will help you stay above water in the long
yep,
run.
yep,
That's why it's so important because again, I keep telling people this, inflation compounds. It compounds.
yep,
And we just did an analysis of what happens with something that costs $5 over a 4 year, 5 year period, right? We saw a 12% increase.
yep.
Now add 12% to buying a $30,000 car. Let's do the math on that. $30,000 times 12%. Now that car's costing you $33,000. Let's do 12% on buying a $250,000 home, right? That home goes from 250,000 to 280,000.
Mhm.
So the bigger the purchases, the more magnified the compounding goes.
Yep,
So again, if you're not invested, if you're not educating yourself on how to be a participant in capital markets, I hope that what we've seen from 2020 now to 2025 on the inflation front wakes you up.
yep.
That's another reason why some people switch jobs so much
Yeah,
because that's the easier way to get a raise.
to get raised. Yeah, yeah, yeah.
Especially,
That's the fastest way to get raised.
and that's the one thing why, a lot of older folks will talk to younger folks and be like, why do you keep switching jobs? Why do you keep moving around? Back then, we didn't see a lot of inflation. So you could really stick around at one job and kind of tough it
Yeah,
out.
yeah,
Now that we've seen inflation, some of these younger folks are like, my job's it's not gonna give me a raise, or my job's not paying me what I think I should be paying.
yep.
And then a recruiter jumps in their inbox and says, hey, we see what you do, and you look at the pay increase, and it's like, oh wow, I'm getting an 8% bump, I'm getting a 7% bump, or I'm getting a 10% bump. They
People
out.
jump on those. Yep,
People jump
yep,
on it.
yep, yep. Or you see people not getting multiple jobs, or it's like
Correct.
you have
See people
multiple
getting
jobs.
side. You see people
Yep,
getting side jobs and things like
yep,
that. It's
yep.
because the compounding of inflation is starting to eat in their wallet. They're starting to see it.
Yes, yes.
So, this is why I encourage people, listen to our channel, join our group. Our goal is to help you combat that silent killer that nobody wants to talk about
Nobody wants to talk
that's
about it.
happening in the background, which is inflation.
Yep, yep. It almost reminds me like how like people say like, oh, at the end of the year like they have new goals and stuff. I was like, do you know like the universe doesn't know it's a new year? Like it's a mental thing. You know what I mean? It's literally the next day. Nothing
Correct.
changed. Like you
Correct.
know what I
Yeah.
mean? So like your life is not like every year in January starts over. No, your life is a compounding, right?
Yeah.
It just
It's a,
keeps rolling.
it's a compounding effect of all the decisions you've made.
That you made.
Yeah,
So the same
that's what it
thing to think
is.
about inflation. Inflation doesn't stop. If you calculate it from 2020 till now, it doesn't start at zero every year. It starts at whatever number we close with. And then, I mean, the way to report it, it makes it seem like, oh, we started at zero. But
Correct. Exactly. See, and that's the deceiving thing. That is the deceiving thing. They're making it seem like every year
we
it
start at
starts
zero.
over,
Yeah.
and it doesn't. It does
Nope.
not.
Nope.
It's a compounding effect.
Yep.
And Trump addressed the nation a couple days ago, and he talked about gas being 2.50 a gallon. My question is
Where?
where? You're in Georgia. What are you paying per gallon right now?
About 280.
280?
I mean,
No,
you in the West Coast, so you
no, what, 280?
280 for just the regular, not even like the premium. The premium is probably still cheaper than yours. Premium is
So
around
so so
395.
so maybe that 250 number might not be as off as I thought.
But what part of the country he's looking at
See,
though?
he's looking at the average. So he's
Okay.
looking at the average. I thought the average would be closer to maybe like 3. But if you're paying 280, man,
Yeah. You need
I'm
to
st-
move. You
I'm
need to
still
move.
I'm still paying 469 a gallon.
You need to move.
And then there's some places where you're still seeing 5.
Yeah. Yeah. And that's for regular, right? That's not like even premium.
So I'm paying 469 for premium. So regular is probably around
Okay.
like 420, 430.
Okay. Okay. I mean,
But if you go to Chevron, Chevron's above 5. I stopped going to Chevron.
yeah.
I
But
stopped.
I have this one gas station that I go to. The price is always like at least 20 to 30 cents less than everybody else.
Okay.
I don't know how, I don't know why, but it's like it's always cheaper than going to like literally across the street, it'd be like 20, 30 cents more.
Okay.
So maybe that's just the way they get more customers. I
I
don't
need
know.
to get I need to get serious about leaving California in
I'm
2026,
telling you,
man.
bro. You would live like a king if you moved to the
Oh
Midwest or the
man.
South.
You know what I would do for sub $3 gas right now?
Dude, you would live like a king if you moved to the South or even Midwest. Like you
Oh
you'll be
my goodness.
good. You just
I
have to
gotta
deal
re
with the cold. That's
I
all.
gotta I
Unless
gotta re I gotta reassess my life.
oh man, I can't believe you paid $4, bro. That's
And
yeah.
you know what they told us? So there's a big refinery by my house that is gonna shut down. So Valero runs the refinery.
Mm.
They are willing to take $1 billion loss rather than conform to the state of California's demands right now.
Oh wow.
And there's another refinery in LA that's going to go out of business at the end of this year. They say if the supply goes down based on the shutdown of those two refineries, they say people in California might be seeing like $7 or $8 gas.
Ooh. Didn't you guys see that back in 2020 anyway?
So I think Valero was in talks with probably staying, but it looks like April next year, they're shutting down
Okay.
the whole refinery.
Sheesh.
Yeah. So I either need
The,
to buy
the
a
state this
bicycle
the
or a
state just
hybrid.
the state just should just take over it.
I don't know what's going to happen. We'll see. But yeah, that's nasty. But I just wanted to put that out there as far as, the effects of inflation, right? When we look at these numbers, make sure I wish people would tell the whole story and people would understand what the full story is showing you because we don't start from zero every single year.
Mm-hmm.
Yeah.
Mm-hmm.
So
Mm-hmm. Uh,
anyway,
yeah, let's look at next week, man. I mean, next week is a short week, I believe. Yeah, Christmas is next week.
hmm
So next week is a short week. Only Monday and Tuesday is probably going to be the full days, and I think Wednesday, the 24th. I think we closed early on Wednesday for some reason. I think, but other than that, man, next week we don't have a lot of economic calendar that's coming up. Not a whole lot of stuff. I mean, we have GDP delayed report that's coming up in Q3 at
hmm
8:30 a.m. We have, of course, the initial jobless claim that comes at 8:30 a.m. on Wednesday. But other than that, Thursday and Friday, the market is closed. And then the following week, we have, I'm trying to see if there's anything big. No, nothing crazy also. So the next couple of weeks probably going to be a little quiet until the New Year's. We can see some more numbers coming in. But other than that, man, I mean, as I mentioned earlier before, when we first started, this is our last episode of the year, man. I'm pretty excited that we covered a lot of stuff this year, man. And I hope you guys were paying attention. If you can go back and watch some of those episodes. I mean, we have ChatGPT now. If you don't want to watch all this the whole thing, just ask ChatGPT to summarize it for you. But overall, man, we covered a lot of stuff. You know what I mean? So again, keep in mind that market is going to test everybody. That's just how it works. You know what I mean? Market is going to test everybody, and discipline is always better than just making a speculation. You know, so being disciplined when it comes to the market, when it comes to trading, makes a way better trader and investor than anything else. Again, understanding where to position yourself next, where to put your money next. That's the key. That's the key point of this. So going into next year, man, like one of the biggest thing I'll pay attention to is those earnings. Kind of what Wale was talking about, especially with those like the Nvidias, the AMDs, the TSMs. Like paying attention to those earnings and actually like kind of starting to see if the numbers that being predicted for AI is either higher, lower, what the guidance looks like, the sales from some of those semiconductors, the chips and stuff, and see how it's actually translating into like the real numbers. As because so far it's just been speculative, right? So it's like let's actually see what the numbers actually looks like. Now that will probably start kind of like position repricing some of those stocks for you, so you can kind of see what the actual numbers should be. The other thing I'm going to watch for is rate cuts, man. Come April, May, when Jerome Powell is leaving the office, whoever is going to get in there is definitely going to be cutting rates. It's not going to be, you know, just the pace of cutting rates, but it's going to be actually like how fast, those rates are going to get cut and how big those going to be. You know what I mean? So we'll see how that's actually going to affect inflations. If it's going to be a good thing or a bad thing, I don't know. That's going to be something to keep an eye on. Some of the other consumers stress signals that we talked about: credit card delinquencies, auto loan defaults. Another thing to keep an eye on is those retail earnings to actually tell you exactly if people are spending money on that. Employment, unemployment, all of those numbers. So keep an eye on those numbers because that's going to give you like the state of the economy in real time. And I hope they give us the right numbers. But yeah, just talk to your neighbor, man. Like talk to your neighbor, talk to people in your neighborhood. Just talk to them about jobs, talk to them about what's going on in the market out there. You will get the real story. Go to the grocery store, look at how people are purchasing, look at the prices on the shelf, see compared to like last year how much you're paying for bananas versus how you're paying for this year. You know what I mean? So keep an eye on those things. That's what's going to give you an understanding of the real on the ground economy. The numbers that the Fed usually report for us is a lot of times it's delayed numbers. So he's might reporting like from like a month ago, 2 months ago. But what's happening in real time is, you gotta go out and talk to people, man. So that's my spiel going into next year, man. Like just keeping an eye on some of those, and of course, energy, man. We talked about energy a lot. Please, those nuclear is not going away unless we have like a crazy disaster. It's not going away. Those stories are here to stay too. So those nuclear plants, Aklo, all the other ones that we talked about, like go look at XLU, all the top 10, top five, holdings on there. That will tell you exactly what's happening. So again, let's go into this next year prepared, man. Like let's not be in a place where we're gonna miss some of those moves and stuff. So Wale, I'll pass it on to you, man, to wrap us up.
Yeah, so again, as we move into 2026, I think Billy has covered a lot of what headlines we should be watching for. I think the biggest one is who's going to replace Jerome Powell. That's going to be a big story in 2026. We probably won't know for the next couple of months, but whoever that person is supposed to take over, I think, May 2026. That's one big story that we definitely need to keep an eye on. As far as macro and microeconomic stuff that goes on, obviously, another thing I want to also be mindful of is pay attention to the private credit market. I think we've seen some stress in 2025 in those marketplaces, which is probably one of the reasons why we're going to keep seeing rates get cut because lower rates makes borrowing easy. It takes off some of the stress on some of these companies that need to borrow money to grow. Um, I'm still keeping an eye on commercial real estate. So far, nothing catastrophic has happened in that space, but we've seen some friction, but nothing to disturb the overall, you know, thesis of the market. Um, Tariffs looks like they kind of flew under the radar now. It looks like we've gotten to a point where you're not seeing a lot of headlines on tariffs,
Right.
which is good. But we saw that that's what started the ruffling of the feathers in the beginning of this year, right? Trump got into office. He started talking about tariffs. That's what gave the market that nasty volatility. We saw a nasty fall in Q1. We bottomed out at the beginning of Q2 in April, and then we just took off from there once everything got set.
Yep.
So those are the things that I would be watching as far as opportunities are concerned. In my opinion, small caps and energy, non-traditional energy are areas that I would be mindful of going into 2026 that could present some long-term opportunities for next year. If you're not invested in capital markets as a person, if you're not allocating some of your assets and resources in the markets, hopefully you have taken some of this knowledge, you have and been able to understand it, and then hopefully you can start to apply it and put yourself in a position to, again, we talked about how nasty inflation can be in the long run, right? So put yourself in a position to be able to outpace inflation long term. But besides that, we thank you for all the support. I think if I'm not mistaken, I think I was just looking at the statistics. I think for this year we had over 14,000 views.
Wow.
So I think that
Crazy.
that's,
We're going to double that next year.
yeah, hopefully we can double that next year. We can get more folks to jump on board. Yeah, 14,800 views for 2025. So hopefully
Nice.
we can get some more support. Again, if the information is helpful, if you've benefited from the information, spread the word and let people know that, hey, we are trying to put people in a position to succeed long term financially. That's
Yes,
our goal.
sir. Yes,
So,
sir. And with that, we're closing out the final Wall Street rundown of the year. So thank you for everyone who tuned in, shared the show, locked in with us week after week. I mean, we don't take that lightly, man. We'll be back next year, sharper, smarter, and more focused than ever. So until then, man, protect your capital, enjoy the holidays, reset your mind. And remember, this is Wall Street where we don't chase the market. We understand it. So we'll catch you guys next year. Happy holidays, y'all.
all right, everyone, take care.
Peace.